a strategy that has worked for most of 2024 and that may have taken a bit of a backseat in 2025. And I'm pretty sure that all of you have contemplated it at the very least, or have even included it in your portfolios. And I'm talking about momentum as a strategy. When equity markets were in this tearing bull market, this is a strategy that it did incredibly well. To talk about where things stand right now and how you should reposition, if at all, I'm joined by Rushabh Desai of Rupee with Rushabh. Rushabh, thanks so much for joining me today. First, can you give me a sense of how momentum is faring right now as opposed to what it was last year?
Hi, Alex. First of all, thanks so much for having me on the show. As you correctly pointed out that last year we saw phenomenal bull run in the overall broader markets and the main indices as well. And of course, momentum strategies have done extraordinarily well over calendar year 2024. But unfortunately, due to the market corrections which we saw from September, October 2024 till a couple of months back, momentum strategies have seen a very steep drawdown. Now, momentum strategies have fallen as steep as around negative 25 to 30%, depending on the momentum strategy. Now, there are various momentum indices, Alex, which consist of Nifty 550 index, Nifty momentum 150 in the mid cap space. There is a momentum strategy in the small cap space. So depending on the mid cap, small cap and multi cap momentum strategies have seen anywhere between 25 to 30% steep drawdowns. See, as we speak on year to date, momentum strategies is around 4-5% negative. Momentum strategies have recovered fairly since the markets have recovered over the past 2 months. But we still have a good amount of 30 to 40% recovery still left in many of the momentum strategies, Alex. So this is where we are at this point of time.
Okay, so it just drives home the point that the flavor of the season can actually change very, very quickly, and something that is doing incredibly well can prove to be a big laggard even in 6 months time frame. So in your opinion, what is the best way to play momentum? And the reason I ask is that there are active funds that have also been launched because of this entire rush towards momentum. So speak about how these active funds have also done.
See, Alex, the best way to make money in this market is to play contra, okay, to take contrarian bets. When a strategy or any particular segment is underperforming and is not doing well, that is the right time to enter and invest. See, I feel momentum strategies will do phenomenally well in the next 2 to 3 years is because we have not yet entered a bull run. We are still in the recovery stage, and momentum strategy does really well and outperforms during a bull market. So I feel number one, this is a very good opportunity for investors to look at momentum strategies at this point of time, because momentum strategies have not yet fully recovered and have not yet entered into a bull run. And as you pointed out that yes, there have been active funds launched, and I feel that AMCs will benefit out of this market correction and will see, their funds will see some good outperformance over the next few years. The reason why I feel that at this point of time investors should look at smart beta passive funds is because the active funds are recently launched, Alex. There are 3 to 4 funds which have launched in the past 6 months, and there are just 2 to 3 funds which have been launched over the past 1 year or so. So overall, all in all, active funds don't have a good returns track record. The returns track record has been less than 2 years. On the other side, smart beta indices have a very good back tested track record. So I feel rather than venturing into active funds, and at this point of time, I would like to wait and see how the active funds are being managed, what kind of strategies or what kind of philosophies within the momentum space is each of the AMC following, and then probably I would like to take a call whether I want to go into the active space or no. But at least at this point of time, I feel momentum is the right place to be in, and if someone is looking for a momentum strategy, then going into smart beta passive momentum index funds is something what I would highly recommend.
Okay, just by the way, in case you're wondering, viewer, what Rushabh was just speaking about, and of course he'll talk in some detail about, but let me give you some color. It is essentially, and what he's saying is a factor, right? So you have an index like the Nifty 500, what happens is that there is a filter that is applied. And in this case, we're talking about a momentum filter. There is certain amount of conditionality that needs to be achieved for stocks to be selected and to fit that bill. This is a reset that takes place periodically. In the case of a lot of these indices, that reset takes place every 6 months. So if you have a passive strategy that has a momentum factor, then every 6 months a certain number of stocks make the cut and a passive investment is made into these stocks. The expectation is that if a certain number of stocks have performed in a certain way over a period of time, they're likely to carry on that momentum for some time more. And that is what the momentum strategy is looking to play on. But this is one factor, Rushabh. Often we talk about multiple factors. And the question I have for you, therefore, is at this juncture, how much of an allocation would you give to momentum? And when you compare it with something like a value, which generally does not do well when momentum is doing well, and vice versa, how would you choose to invest?
Alex, this is a great question. See, as advisors, we recommend our clients to diversify well. Okay, every strategy will have its cycles of outperformance and underperformance. Value and growth, and within growth, momentum we can bucket in momentum as well. So broadly, Alex, see, there are four strategies in the market. One is growth, one is momentum, one is value, and the fourth one is contra. So we can put value and contra in one bucket and growth and momentum in another bucket. Now, both of these strategies beautifully complement each other. Okay, we saw from probably end of 2020 or early 2021 to 2024, that so value as a segment did well. Momentum somehow did very well in 2024. But as we speak, because the markets were very overvalued and overheated, value really works well in recovery phases and in overvalued markets. Okay, so both of these strategies will do phenomenally well in different phases. So I feel having equal allocation in both of these strategies, both of these buckets makes more sense, because we don't want to concentrate in one particular strategy and completely put your overall portfolio in the underperformance risk basket, right? So I feel having a good blend of value, growth, contra, and momentum, and in equal allocation will do a good job going forward, Alex.
Got it. Okay, so with that in mind, I also want to ask you about the duration that you should be willing to spend on both value and momentum, because obviously this is part of long-term portfolios that we're talking about. You may not get the best experience if you're only investing for a period of 6 months to a year. So in your opinion, how much is the minimum amount of time that you need to give for these strategies to bear fruit?
Alex, any investor who's coming in the equity market should have a minimum time horizon of 5 years at least. I'm talking from a lump sum point of view. If someone is investing via the SIP route, then the minimum time horizon should be probably say 7 to 8 years. Okay, so I feel number one, minimum time horizon for any equity strategy should be 5 years. Value comparatively would be more cyclical, can be more cyclical, and I think value deserves a little bit of a longer time horizon, say probably 6 to 7 years, but a minimum time horizon of 5 years should do the job.
Okay. All right. And final question, if you are relatively risk averse, should you avoid these strategies, or is this something that everybody can add but at a lesser allocation?
See, momentum strategies will be high risk strategies, Alex. So if someone is not willing to stomach volatility, and if someone is not able to take a high amount of risk, then of course a little bit of allocation, can be taken, probably say around 5-10% or so. This is what I would recommend. Someone who is not willing to go into this kind of cyclicality risk and volatility risk, just opt for a traditional flexi cap fund following a blended strategy. A blended strategy means the fund manager will follow both value and growth at the same time. Okay, where he or she feels as per his or her insights. Okay, so I think going into a blended strategy makes more sense. But if someone is wanting to take risk, has a long-term time horizon, then creating a well-diversified portfolio of different funds following different individual strategies will be much better, Alex.
Got it. All right. Rushabh, thanks so much for joining me today. Absolute pleasure having you as always.